Good morning, good morning, good morning. It is the 1st of April. Finally, March is under the belt. Q1 is under the belt. No one cares about your results then. It's all about what you do in the next month and the next quarter ahead. Just pre-warning, anyone that's trying to do April Fool's jokes, grow up. There's just too much going on in the world right now. I do not know. And people are so stupid at the best of times. I don't know what's made up and what isn't anymore, to be quite frank. But anyway, enough of me. This is the Morning Blast for myself and Michael Brown. As usual, a very, very candid take on what's going down in markets. We do not pull our punches. We do not apologise for very foul language. Take us as you find us. Nothing we say is trading or investment advice. Michael, how are you?
Yes, very good morning to you, Ryan. Good morning, everyone. Not too bad at all, thank you, mate. And, you know it's bad when Ryan Paisy, of all people, is telling you to grow up. I think that says more than anything about the environment we're in at this point.
At least when I'm pulling someone's chain, metaphorically speaking, like, I'm on the wind up. It's just, there's just so much bullshit going around on Twitter anyway at the moment. So many weird things, headlines, like, some of these headlines that are made up just look real, and that's not what April Fool's is meant to be about.
Well, no, and more worryingly, some of the headlines that are real look like they could be made up these days.
Exactly that. It's like, you wouldn't want to be a headline trader today, that's for sure. Especially when corporations are kind of putting out bollocks about like weird inventions that they're putting out and stuff like that. But
anyway, cancel April Fool's Day.
Yeah, I've just had enough of it. But anyway, telling you, well, speaking of someone that isn't having a laugh and he's very unfunny, Clive Lambert.
Poor Clive.
Our dear friend Clive over at Futures Tech. So let's start the show as we normally do with a look over at what he's putting out this morning on market moves overnight and yesterday, and also levels to watch on the day ahead. So as usual, big thanks to Clive over at Futures Tech. Here we go. Reversals are plenty, and it has been a strong trade, which we'll go into shortly. S&P rallied smartly yesterday and left a morning star on the daily chart. This morning, we're above 65.94 Fibonacci level we're watching, so we'll see if that is sustained. Dow futures back at its 200-day simple moving average this morning, simple daily moving average this morning. So that one for the headline writers. Nasdaq also posted a big green candle yesterday in its iron resistance at 24,255. The DAX posted a piercing pattern. That's one I'm going to have to check in the book what that means. On Monday is now confirmed it this time, currently set to open at 20. Well, I say set to open, it's already open by now, but when he went to print, it was set to open at 23,350, a Fibonacci reference. The FTSE futures have retaken 10,152 and is now gunning for 10,445. Bund futures also testing a Fibonacci retrace level at 126.26. Ditto for T-notes, confirming the morning star with future gains yesterday to test Fibonacci resistance at 111.14 this morning. In the currencies, Euro, dollar and cable both posted large green candles yesterday. Even Bitcoin joined the party with gains seen to 69,000 so far today. Obviously, this is time of going to print. They're not door numbers, so if they're not where we go, just go and fuck yourself. Gold, the yellow metal, put on a decent slug of green on the chart, retaking 46.27 and can now target 49.35. Silver currently above the 75 big figure level we've been highlighting of late. 76.91 is a down trend line on that one. So that'd be the next hurdle for the bulls to overcome. Elsewhere in the metal space, zinc is back at resistance at 3,239. Although aluminium posted a shooting star bearish reversal yesterday, rejecting upside just shy of big resistance around 3,550. In crude space, Brent crude saw selling in two waves yesterday down to 102.65. This level was broken this morning, probably weakness to a 98 handle as Clive went to print. God knows where it is when you're listening to it, quite frank. WTI, bit more of a muted response. Obviously, Brent has been the more aggressive market to be trading over what's going on in the Middle East. But the WTI, obviously, as we said, more muted, which has seen the spread to the Brent come right in. May, WTI now supports at $92.48 and $91.32 lower down.
Just on that, very quickly. Obviously, we had the Brent expiry yesterday. The number of bad takes that were doing the rounds on the back of that were ridiculous. People looking at the May when all the open interest is in the June. I mean, again, I feel like we're almost at a point here where you've got certain market participants, certain people on the sell side, I shan't name any names, who are deliberately looking for the most extreme market move or the highest price of a certain barrel of oil that no fuck has ever heard of before and deciding to quote that today because it sounds scarier.
No, absolutely. And there's, that's a story as old as time, unfortunately, but it just seems social media amplifies the bullshit, unfortunately. And that's why people should listen to us, because
It will indeed. We will cut through the nonsense.
We will cut through that nonsense.
Oh, we'll certainly try.
And shovel that bullshit aside. What is it? Gas oil. The European diesel basically fell shy of gap resistance at 12.82 on Monday and has since tracked back to 11.68 as Clive went to print. TTF, European nat gas benchmark, sold off an early trade today after posting a big red candle yesterday and is now on support of 46.53. MBP is also setting a weaker tone and gap lower this morning. 125.92 is gap resistance. 113.81 is the next support and target down lower. Thank you for that, Clive. Pleasure as always, my dear friend. Michael, what's been going on?
Well, I'm going to ask a stupid question this morning. Someone tell me what NBP is, because it ain't the National Bank of Poland, and that's the only acronym for that I know.
You know what? I don't actually know what he's on about there. It's going to be fun.
Is this a fucking April Fool's joke from Clive? He's just seeing if we actually would have read that out.
Oh, it's UK gas, apparently. It's the UK.
Oh, right. So, of course, it would have been easier to say that, but never mind.
But, a market that we've never seen him mention before. And, yeah, thanks for that, Clive.
Deary me. Thank you, Clive, throwing us under the bus once again, but never mind. There we are.
On the WhatsApp, he's now calling us wankers.
Well, he's probably right, to be honest.
Look, if it was US gas, I'd have been all over it. But no, who cares about UK gas?
Well, quite.
It's not like we've got any. Do you know what I mean?
Well, no, that's wrong. We've got plenty. It's just all in the ground.
Yes, quite.
We're not allowed to get it out. That's the issue. Anyway.
I've been told that many times.
Oh, God. Moving swiftly on. Thank you, Clive. Not sure if I want to thank Ryan, but there we are. What's the message this morning? Very much a positive one from financial markets yesterday and spilling over into today. The S&P and the NASDAQ actually yesterday both notched their best one-day gains since all the way back in May of 2025, which is pretty remarkable in itself. The other thing that is quite remarkable is that the S&P closed up by 3% yesterday. And I think, well, certainly if you told me a month ago that war had broken out in the Middle East and we get a 3% up day in the S&P before we get a 3% down day, I'd have been very, very surprised indeed. But that is nonetheless what has transpired.
I tell you what, though, one thing we are not surprised about, because we absolutely nailed this yesterday, is Trump wanting to finish the quarter with some pumpy tweets.
Well, exactly that. And that, clearly the White House are marking to market their book at the end of the quarter, which may be...
That's the morning blast.
Well, yeah, and that. Good morning, Donald, if you're there. And that could be useful information to bear in mind as we move forward. But you're absolutely right, Ryan, and the positivity continuing this morning. This is, obviously, firstly, we have the Wall Street Journal reporting overnight, Monday into Tuesday, that the US were considering basically ending the war without trying to resolve the issue of the Strait of Hormuz. President Trump basically saying the same thing, just not in quite as many words, with a Truth Social post yesterday. He was saying that countries that can't get jet fuel because of the Strait of Hormuz, and he did flag the UK explicitly in this, should either buy that fuel from the United States or, and I quote, go to the Strait and just take it. The USA won't be there to help you anymore. Iran has been decimated. The hard part is done. Go get your own oil, Trump said. We then heard a similar message from him later on when he was speaking in the White House, signing some executive orders, saying that the US will leave Iran in 2 weeks or maybe 3 weeks or maybe sooner. Of course, we've heard that before. But again, he did say that the US could exit the war even without a deal and even without reopening the Strait of Hormuz. I think the key takeaway from the last kind of day or two in terms of market action is one where it is increasingly the case that the US are delinking or decoupling the goals of the mission, Operation Epic Fury, in terms of destroying missile launchers, etc., and the idea of reopening the Strait of Hormuz. They are now two very, very separate things, and they are not mutually exclusive anymore.
I think, he actually explicitly said that, we could actually walk away without a deal.
He did, yeah.
Which basically means that, if you remember what the deal was meant to be, originally it was meant to be opening the Strait, etc. As we said yesterday, and potentially I think maybe the day before, we definitely mentioned it a few times, that increasingly likely that he doesn't really give a shit about the Strait anymore.
Yes.
And he's mentioning about missile launches and stuff like that. You can argue that they have succeeded in that because they've done some significant damage via kinetic action. And it seems to be all coming like, as we mentioned before, if there isn't an off ramp, just invent your own. And I think he is exactly what he's doing. Again,
Yes.
obviously, I think we've got to be mindful. April the 6th was this deadline where if the Strait wasn't open, Trump was going to target energy infrastructure. So just have that in the back of your mind because you never know with Trump. But increasingly, it looks like he's happy to walk away and leave everyone else to pay the cost.
Yeah. And, again, we need to flag that the situation is still very, very uncertain. This could all have changed considerably by the time you listen to this, whenever that may be. And of course, Trump is due. Oh, hello.
So 10 minutes time.
Well, yeah, exactly that. And the other thing, of course, is do bear in mind that President Trump is due to be giving this address to the nation this evening in the United States, which will take place at 9:00 this evening Eastern time. So about 2:00 in the morning, Thursday morning here in London. Obviously, we don't know what he's going to say in that address. So that is a risk to have on the horizon. But I think from my perspective, there's probably three kind of key takeaways from how markets are trading yesterday and this morning, as Clive rightly alluded to. Stocks bid across the board, government bond yields falling across the board, and crude prices coming sharply lower as well. I think the first of those three messages for me, and Ryan, chime in here whenever you want, is very simply a situation where there is no war is better than a situation where there is a war. And I think that kind of goes without saying. The second, trade effectively that the market is making this morning is that some oil probably flowing through a Strait of Hormuz that might be controlled by Iran, and there might be tolls levied or whatever, is a better situation than the current one where there is basically no oil flowing through Hormuz and no one really knows who controls it. And that's probably why you've seen crude come lower. Yes, there are, long run, probably significant geopolitical implications of the US basically saying, we made a mess, everyone else can go and sort out that mess, if that is indeed the path they go down. But the market isn't trading that right now, and that is a very, very difficult trade to put on if you were even thinking of doing so.
Just kind of zooming out a little bit, if from maybe taking off the direct trading hat for a second, it is, if this does happen and Trump does go, do you know what, we've accomplished what we've been here to do, we're now walking away. Basically what he's done is come in, he's basically kind of beat the shit out of Iranian infrastructure, which is done no good to the people of Iran whatsoever. The regime hasn't changed, really. It's like,
despite what he says, yeah.
It's just new people in charge, but from the same parties, the same affiliations, etc. And now every ship that was passing through without paying around a toll have now got to pay around a toll. So pretty much every possible angle has got worse because of this.
Yes. And I think this is an important point, because if you compare what could be the new normal, for want of a better word, whenever that comes to pass, with where we were pre-conflict, clearly it's worse. Clearly it's a worse situation. I don't think anyone can make the opposite argument.
No.
However, it is better than the baseline, which is where we are right now.
Yeah.
And it's probably also better than, if you think about how vast that distribution of outcomes was, and arguably still is, it's probably towards the right tail of those outcomes in terms of, crude is getting through. It's not ideal. There is risk associated. But again, what you need to compare it to is where we are now and where we could be if the now continues, i.e. fuel shortages, et cetera, and whether that could be a better scenario than now. I think unarguably, yes, it could be.
Yeah, no, absolutely. I think one thing to, now taking it back to trading, one thing that I think I would be keeping an eye on is the fact that Trump, we know, is marking his tweets, marking his policy decision to markets, right? We know that's what he's doing, not just for his own bank balance, but for his dear friends' trading accounts as well. Now, he's going to see the market reaction to his latest few tweets, and that will be noted by him. He's done some few, the last week or so, Michael, you've put out that chart a few times whenever we get that little Trump pump.
Yes.
They've been, the pumps have had smaller impacts of late, and that's why we've continued to come off in terms of stock price and more equities I'm focused on right now. But what he's done over the last 24 hours have had significant upside. And the market is clearly a big fan of the US walking away. There was an Reuters Ipsos poll yesterday where 2/3 of Americans from both sides of the aisle would prefer Trump to walk away, even if he hasn't achieved all his goals. Now he's going to be very mindful of that because he loves being popular. He loves being popular with his own party, especially. And I think it was like a significant number. I think even with his own party, his ratings have never been lower. So this will be weighing on him. And if he can distract and move on to something else, he will do that. Now,
yeah. Well, I think the other thing, sorry, just on that very quickly, is, if you think about your India or your China or your whoever who relies on commodity flows coming out of Hormuz, you are going to be sat there going, we need oil and we need to get it any way that we can get it. It's much easier once the US have withdrawn from the Middle East and Trump's gone, we're done, mission accomplished, etc., to then effectively ring up the Iranians and go, right, what's the fee? How much are you going to charge us to get through Hormuz? Whereas if you try and do that now, Trump's going to see that as, well, hang on a second, you're going against me here. You're not an ally anymore. Whereas if the US have declared victory, it's a lot easier for those conversations to happen and for commodity flows to then resume to a certain degree.
Yeah, I mean, there's a lot of 4D chess and all that going on here, but I think, it's kind of taking it back to basics, which is I'm always a big fan of, for many reasons. I think, I just feel like, obviously, we've got this, it could be all better off when Trump's talking later on, but I've just got a feeling now that Trump will be increasingly seeing the light, that this is what will get him a better midterm result, because don't forget that's going to be playing on his mind somewhat. I mean, obviously, no, I have not seen anyone mention the midterms in the last 2 months. Well, I've not seen anyone mention the midterms in the last 4 weeks, which is bizarre because this will have a direct impact on it. I'll tell you someone else who's having a chat today or a media conference. It's Keir Starmer.
Well, can I just say two other things firstly, just very quickly? One, on Trump and his address to the nation later on, fully expect that to leak in advance. Not the entire speech, but a journalist somewhere will get the scoop on the broad brush strokes of what Trump is likely to say. So if you're thinking about having to stay up until 2:00 tomorrow morning here in London to watch it, you're probably going to know what he's going to say well before that. The other thing I would say, just in terms of the other market implication of all of this, the inflation shock has not gone away. The growth headwinds from higher energy prices have not gone away. The economic impact of that has not gone away. It's simply that markets are almost in a binary mood of, is there a war going on or is the war likely coming to an end? And that's what's being traded this morning. Everyone is just kind of leaving those difficult questions that I just mentioned for another time, so to speak.
Yeah, no, exactly that. Exactly that. You are spot on.
But yes, Keir Starmer, God help us.
Yeah, any idea what that's about?
Yes and no. My understanding is that this is not some sort of, crisis messaging. It's more a case of today is the 1st of April. That means that a lot of the quote unquote cost of living measures that were announced in the budget last year are due to go into effect today in terms of, money off energy bills, freezing rail fares, et cetera, et cetera, et cetera. So I believe this is one of those where Starmer was probably going to hold a press conference today anyway, just to kind of tout all of the stuff that they did in the budget, which was 6 months ago. We are, of course, 6 weeks out from the local election. So just forget that there's a war going on at the minute. I think they would have always done something today to try and drum up a bit of support for what they announced and what people have probably forgotten about. I think a lot of people are kind of putting 2 and 2 together and making about 17, because you've got the Aussie Prime Minister doing a press conference in about 10 minutes' time. You've got Keir Starmer doing a presser, I think, 10 o'clock this morning. And then you've got Trump doing this address to the States later on today. As far as I can work out, and I may be hopelessly wrong on this one, I'm pretty sure that that's just pure coincidence. And it looks scary. There's a war going on and 3 world leaders are going to address their countries on the same day. But I don't think that's the case.
Yeah, well, that's the thing. The scary thing is one of these world leaders is Keir Starmer.
Well, also the other thing on that, and I can't remember who it was, someone put it out on Twitter earlier on, but if Trump did have some huge news that was going to announce and all these pressers were going to be linked, why would he let the Aussie PM announce it for him?
Yeah, true. I don't know if they're linked per se, but I was maybe part of me, the romantic in me was kind of sitting there hoping that Keir might announce that, do you know what, because of fuel prices, because the government have just finally woken up to the fact that the last jet fuel shipment from the Middle East is landed or docked, that maybe, just maybe, Ed Miliband might do a little bit of a U-turn, and that's what they might be announcing.
Yeah, I fear that may well be born out of hope than out of expectation, sadly. But
just me clinging on to the hope that one day a press conference will come out with some good news and a wise decision, which at the moment isn't seemingly unlikely.
Well, the one you need to look out for, of course, is the day, and it will come eventually, when Keir Starmer gives a press conference outside Downing Street and the lectern doesn't have the emblem on it. That's the one we're all waiting for,
God.
isn't it?
Do you know what? I'll be champagne in one hand, cock in the other. What a day! What a day that'll
God.
be! What a day that'll be!
Christ.
But enough about me celebrating Keir Starmer's demise. What else have we got today, my dear friend?
I have so many questions about that, but none of them I'm going to ask.
What a terrible day to have a vivid imagination.
What a terrible day to have ears and have heard that in the first place. Jesus. Right. In terms of today, then, of course, we do have Starmer speaking, Trump speaking, etc., etc. Busy data docket as well, actually. We get a whole host of manufacturing PMI numbers. We get data from the eurozone at the top of the hour, data from the UK at 9:30, and then the ISM manufacturing survey from the States at 3:00 this afternoon. That ISM print is seen at 52.3, which would be down marginally from the 52.4 that we saw in February. So I'm going to go out on a whim here and say that risks to that consensus number tilt pretty considerably to the downside. Besides that, we have unemployment figures from the eurozone due at 10:00 this morning. Unemployment set to have held steady at 6.1% in February. That would probably be more interesting than listening to Keir Starmer, actually, if we're being honest. And then across the pond, 1:15, we get the ADP employment numbers. This data, of course, is for March, comes ahead of the payrolls report. That jobs report, again, just to recap, is on Friday. Yes, it's Good Friday. No, I don't know why the BLS have done that, but there we are.
But this is why ADP is such an important number.
Whatever. ADP is set to show private sector employment having risen by 40,000 in March compared to the 63,000 that we saw in February. We may as well do a payrolls preview tomorrow, actually, because otherwise we won't get a chance to do it. And also from the States today, we get the latest retail sales numbers. This data for February, headline sales seen rising by 0.5% on the month compared to the 0.2% decline that we saw in January. Of course, geopolitical events are likely to dominate as well as we move through the day. Focus very much, of course, on President Trump's Truth Social feed, but also on any indications as to what the president may be saying in this address overnight.
Absolutely. And again, like Michael said, expect this to be leaked. So keep an eye on the usual wires to use PIQ, because Twitter's a hellhole and we have all better tweets on the platform anyway. But Michael, thank you as always. Pleasure. Listeners, we hope we've added a bit of value and put a smile on your face. Yeah, have a great one. Tune in tomorrow. Much love.
See you later.